Welcome to TradeTheMBI.com. This is John. This report is for the 6th. Well, we were looking for some weakness. We began to see the softening of DOC, at least from that standpoint. The rising gold meant that any dip we were looking at wasn't going to be severe, so to speak. All we did was move right back to that same 4008 level that we had deviated from, and there was that support coming off of it from before, but this time broke right at it, and under much weaker conditions now because you clearly have steel lower than cyan on the DOC down here. Um, Cyan above zero, so short's a bit more active. The gold rising has been enough to really maintain the support up here and give it some strength. And this is, just a reflection of the catalyst of continued rising rates. Yes, you've got some improvements with oil and things like that, but are they more representative of a slowdown in economic growth? And that really is the question mark. I think a lot of the numbers coming out of government institutions with all of the adjustments and that they're just not as effective, and there's huge discrepancies between them and like household surveys and that, and so you really begin to question who's giving us real data. Um, and we've known for a long time that it certainly isn't coming out of government numbers that do whatever they can to massage it to make it as least impactful in a reading standpoint as possible. The Fed has continued to indicate they're going to keep tightening. And even if they slow the pace of tightening, that's not the same as quantitative easing, which sort of was the exuberance that we saw from the big jump up. The question really is this dichotomy that you see between the idea of are there increases in wages, or were these severance packages that just created more of a bump to hourly wages? Uh, Treasuries still continue to be soft from a yield standpoint, which flies in the face of what we know to be the Fed said that they're going to increase rates again. So strange. This drop in oil, literally, this becomes a question of are you seeing outsized supply or you just have a demand fall off? That's a significant question to answer, and that's why we follow that because it's a real indication of where things are likely to go. Gold peaking out right there, same softness. I mean, interesting to see it read pretty identical to what the market overall is. It doesn't normally trade in tandem that way. The softer oil definitely bolstering the euro, but euro's being bolstered anyway by the fact that they're not in demand of those dollars. The Fed has made that an easy one for them. So that's spared the Eurozone, though nothing really good is happening in the Eurozone. Everyone's really pins and needles on the idea that maybe there would be some resolution to the Ukraine Russia thing. I think that's optimistic at best, unless the U.S. realizes that they need to capitulate. Uh, it could be tougher for them to get funding with the new Congress, but that being said, the status quo really hasn't changed a whole lot. Speaking of which, status quo, that's what you're seeing right here from Bitcoin. Um, Still, again, not horrible. It's breaking down slightly when it comes to the MBI readings in there, but still rising shakeout. Then this is going to take some time, like we mentioned, because of that depth of collapse that took place in that shakeout reading, and the fallout from the FTX scandal still unknown, and literally leading to some of this stagnation. But certainly the volatility change for us, great. Nice short little moves on the 50K that really were exacerbated by those signals, and they were pretty clean. And this was early on from yesterday, towards the end of the close. We had the short signal. Nothing changed from that all the way through. We filled in a bunch of positive extremes from the previous day, which if we slide back just a little bit, you can see all those positive extremes began right about through there. And then once it broke that level, then it was just a race towards the next series of previous algo levels, 40.31, when that one didn't hold, we ended up with all these lovely white spikes. If you look back at the early part, indication that we were still coming back down to another zero even after the slight attempt at a move. And sure enough, market cratered, and then of course bought back in after hours to fill in some of that, just to make it as difficult as possible. There's an argument that there was a lot of shorts that were forced to cover on the previous day when we had the nice bounce back, uh, and all that cover did was remove all those new buyers from the market, and sure enough, it fell under its own weight. And that is the beauty of that market playing the opposite side of where people have an advantage. Works every time. As always, though, we'll continue to follow signals. Trade well. We'll talk again later.